Good afternoon and welcome to another VSA Capital Technology and Transitional Energy podcast with myself, Phil Smith, analyst, and this week's guest is David Scriven, head of sales, given that my normal sparring partner, Andrew, is away on Easter vacation at the moment. David, good afternoon to you. How are you, sir?
Good afternoon. I'm very well, and I think our leader is in his Cornish lair. But shall I crack on?
That would be fantastic, David.
Okay, so in the USA, the data this week has suggested the labour market is weakening. A report Wednesday from payroll processing firm ADP suggested non-farm private sector employment rose by 145k in March, down from 261k gain in February and below expectations. And the market's expecting initial jobless claims to come out shortly, and the street's looking for 200k versus 198 prior. So investors have shifted their attention perhaps away from March's banking turmoil back to risk of a recession, and that could drag on consumer spending and corporate profits. This was expressed last night in underperforming sectors such as consumer discretionary, industrials, infotech within the S&P 500. I would, however, looking at sectors, however, point out that the KBW Regional Bank Index is not showing signs of stabilizing, but excuse me, some brokers are getting behind some of the banks to highlight value ahead of the upcoming earnings season. For example, Baird upgraded Zions and says weakness in banks beyond overdone. Anyway, in technology, our key focus, the SOX index was lower yesterday, but still looks to be in an uptrend from the October lows. A name that looks interesting to me is ASM International, and I think should be on investors' radar. ASM is a market leader in atomic layer deposition, ALD, a key technology to transition to the next generation process geometrics. This growth is engendering a high teen revenue growth and underpins a positive 5-year growth outlook. While the company has flagged caution on fiscal year 23, in other words, the second half down versus the first, TSMC has signed up to use AMS's ALD, and these orders are likely to be seen starting in the second half of 23 into the first half of 24. The stock trades at a premium to its peers, but could stand out for growth in a downturn. And perhaps now moving into our part of the world, Phil, you can comment on some of the things that have caught your eye.
Yeah, absolutely, David. And ASM, the company you just mentions in semiconductor, there's a semiconductor equipment company, and we're talking about the silicon chip market. So let's kind of move on a bit into tech. I mean, a big driver of technology spend and semiconductor spend is automotive, and particularly vehicle electrification. Of course, all eyes this week were on quarterly results from Tesla. So Nasdaq quoted, of course, and Tesla reported it's seen record sales for the quarter just gone, and that, you know, as we know, it's been very active on price cutting to stimulate the market. It saw sales up 5% from its previous quarters to 423,000 worldwide, and they were 36% higher than the prior quarter last year. So it was sort of a bit of a debate over, you know, whether it was shy of estimates or not, but nonetheless, very strong growth. And Elon Musk is estimating 2 million sales this year following price cuts. So this is something we're going to watch very closely. Really, really key there, because not only is it a driver for the wider semiconductor markets, but it's also a reflection, David. You know, auto cars are big ticket consumer items. And it's a reflection of consumer spend. So that was results from Tesla. Moving on to another area, and one of the biggest areas of spend in technology, and this is cloud services. The biggest cloud providers, as we know, and with all of the data centers, are Amazon, Microsoft, but then Google. And there's an article in The Guardian this week, and this was about Amazon and Microsoft facing referral to the UK's competition regulator. over competitive practices in the cloud services market, and citing significant concerns about big tech companies abusing their positions. Well, this has happened before for tech companies, we know, but also it looks like the regulator Ofcom said it's going to refer the whole sector to the Competition Markets Authority. So we'll watch that one with much interest. And there was a Reuters article on March the 30th where Google was actually accusing Microsoft of anti-competitive cloud computing practices. So we're going to see how that develops. Ultimately, the outcome of these things can be very good. There's so many businesses use cloud services from Amazon, Google and Microsoft, that ultimately it may be good for businesses. So we'll watch that one very, very closely. And another company that feeds into the whole cloud services sector. Remember, cloud services is all about servers in data centers supporting companies' IT infrastructure and software. One of the biggest providers of memory chips into computer servers is Samsung Electronics. Obviously, big maker, David, of consumer electronics. But again, this was from Reuters, and their first quarter profit is expected to plunge 92%, the lowest for any quarter in 14 years, as a chip glut worsens and buyers like data centers, computer makers slow purchases. I mean, what I would say there is, something like that needs to be looked at very closely, because Samsung's a huge maker of memory chips into computers, and memory chips are commodities, and it's the factories cost a lot of money to build, and they in terms of timing of demand, supply and demand, well, one has to be very, very careful of that. And if new factories come on stream, there's loads of supply comes on stream, demand weakens and pricing can fall dramatically. So Samsung's seeing, I think, some impact there. But Samsung's also the biggest maker of TVs and smartphones, so we need to watch in detail when those results actually come out to see what they're seeing in terms of consumer spend. So that was Samsung on memory chips and more the PC kind of market. But another company whose name might not be widely known is Hon Hai Precision Industry, but they're better known as Foxconn. And they're a huge manufacturer of iPhones in China and other consumer electronics. And they reported their revenues and said that they had seen a slower March quarter. But also, they've had problems at their facilities with COVID protests as well. So, it's just trying to gauge at the moment. I think we're in a phase where we're trying to gauge what is the impact of what's happening with consumer spend, what are consumers doing in terms of buying tech, from automotive, from autos to PCs to smartphones, but also business spend on IT. Okay, so I don't know if you saw that one, David.
I didn't see that one. That's very interesting, though, but it actually all fits into this theme of the market, focusing on whether we're going to have a soft landing or not, and its implications on consumer spending. So absolutely crucial. Yeah,
absolutely right. Now, in terms of corporate spend on IT, Computer Center, and that's spelled, they're quoted, and it's COMPUTACENTER. I haven't got a ticket to hand. I think it's CCC, but they're quoting Computer Center, and they are a very big provider of IT services to business and IT infrastructure. So it's all about business spend on tech, and they reported their full year revenues up by 29% to 6.5 billion. Up from 5 billion the prior year, although the prior year, 2021, was restated from 6.7 billion to reflect a change in how they're reporting software revenues and resold software. Nonetheless, their adjusted pre-tax profits were up to just under 264 million from 256 million, while earnings per share were up by 3.2%. And the company came out, and this was really interesting, and it said it doesn't have anywhere near the same challenges faced in 2022. Most of its demand for its largest customers remained solid, particularly for IT and infrastructure. And I think it's also seeing improved supply chains in terms of compute equipment as well. And they're confident in the future. They recruited 4,500 new people during 2022 to just under 20,000 while growing offshore operations. So, computer centers have a long track record of profit generation, and interesting to see what they're saying there about corporate IT spend, and they're seeing it as remaining pretty strong for them.
Mm-hmm.
And moving on to tech, onto telecommunications actually, and this is Cerillion, the one we commented on quite a bit actually previously. As Cerillion, the ticker is CER. The market cap's 333 million pounds. And their software is used for billing, charging customers. So this is big telecommunications providers. They provide customer relationship management software. And they also, it's not just telecommunications, but they provide software to industries, finance, utilities, transport sectors. So it's it's a pure play software company. And it's been growing very well. The shares have been doing very well. They've announced they've signed a £10 million contract with an existing telecommunications customer, which is operating in EMEA region, and that contract will support the current market forecasts. Now, the forecasts I saw on Icon are for revenue growing from 38 million to 44 million, and for the pre-tax profit growing from 14 to 16 million. Now, quality, as we say, does not come cheap. This one's trading on a P of 31 times, falling to 27 times, but it has been growing consistently. So that is Cerillion. Okay, and I guess finally, a couple for me, David, is Traxys. TRCS, the ticker, 256 million market cap. They had interims, and their software is used in the transport industry for, oh my gosh, used widely in the rail industry in terms of transport planning, managing freight yards, managing trains, tracking trains, where they are, scheduling drivers. So right at the heart of rail networks. Also in terms of equipment monitoring, of monitoring safety, for risk management. So right, as I say, software deployed in the depth of transport. They'd seen their interim revenue increase by 4% to 39.2 million. They had 69% revenue growth in rail technology and services, so quite a strong area of growth, with also seeing growing business into North America. The profits were up, adjusted EBITDA by 21% to 7.5 million. And the company has 17 million of cash, and it has no debt. They said it had a positive start to Q3 trading, high activity levels across the group, and unchanged expectations for the full year. So that was a nice, good set of interims there from Traxys, tickers TRCS. And I think, and this is a final one from me, David, is Kooth. And again, this is one we've discussed. Its ticker is KOO. Market cap is £77 million. Year-end December results, and Kooth have developed a digital mental health platform. And of course, sadly, mental health has been a big area of activity in the UK and growth, and with significant problems for children and adults in mental health, and their software really helps people who are struggling with mental health issues, provides them with rapid access to support, self-help resources, peer support communities, one-on-one professional help. And Kooth partners up with obviously governments, healthcare providers, insurers, and employers, and they have on their platform, I think, over 1 million users now. So yeah, supporting 1 million individuals there in the UK and in the US. So doing really important work on supporting mental health. They said that their revenues in line with expectations, up 21% to 20 million. This is for the full year. Net revenue retention of 107%, so strong retention, and their gross margins were stable at just under 69%. Adjusted EBITDA was slightly down to 1.6 million from 2.1 million because they're investing in rolling out the products into the US. And they've got back again balance sheet cash of £8.5 million and no debt. So that is Kooth. in terms of software and tech. And that, I think, for me, really, in terms of results, is about it, David. But we are entering the US first quarter results period, and so we're going to be watching very closely what is going on and what sort of signs it gives for us ahead in terms of spend, consumer activity, where investment's going into tech, and the good areas of tech to look at, and transitional energy, of course.
Indeed, and I was just thinking back on your very interesting comments throughout this podcast, and I was thinking of Tesla, and just thinking, of course, with the price cuts and your discussion on the sales that were reported a short while ago. I would imagine that it obviously has impacts on other autos, and for the emergers, if you will, the Fords, at least they've got other profit centers to help them go through if there's price cutting. But it really kind of highlights perhaps that Rivian doesn't have that, so that might be a stock that you want to keep an eye on because of what's going on with Tesla as well, and just the industry in general.
Yeah, well, it's transport's a key part of the energy transition, and as is vehicle electrification, and Tesla's leading the way. But as you rightly point out, the very big car makers like VW and Ford and GM have got they've got wider balance sheets to support the transition as it's happening, and Tesla also, given that it has some of the most advanced production processes and best developed engineering in the business, has got the it has the flexibility as well to to cut its prices and absorb cost and increase efficiency. So yeah, really important to watch from the point of view of the energy transition, but also from the wider tech side of things, because automotive in electronics is it's a key market. Yeah, absolutely.
Indeed. I mean, I think that's it from me as well. So unless we want to add further, I think we should want to wish our listeners a very happy Easter.
Yeah, absolutely. A happy and relaxing holiday for all of our listeners, and we look forward to very much catching up with another podcast at the same time next week. As always, and as Andrew says, if you've got any suggestions for us, any companies you'd like us to discuss and ideas, then please send us to us. And with that, David, thank you very much for joining me this week.
Thank you.